Hey everybody, welcome to trade part 3. In trade parts 1 and 2 we dealt with import markets. In this video I'm going to talk briefly about export markets. I'm going to skip some of the math, like how I get these numbers. This video is just here so you have something to check your work against. If you're curious on how the exact algebra happens, I would recommend looking at trade video 1 and maybe you'll be able to build it from there. So here's what we're doing now. We had an autarky price of 140. That's the equilibrium price in this market. But let's introduce a world price that's higher, a world price of 170. And so that on our graph looks like this, whereas in our importing market in the first two videos, that line was below equilibrium. Price of 170. Well, at this price, what's the quantity demanded? Plug it into the demand curve, you'll get 30. And at the same price, plug it in the supply curve, and what quantity do you get? You get 75. And so we have a quantity supplied, we have a quantity demanded, and remember in our free trade market we assume that the rest of the world's like a giant vacuum, that they will buy everything we're willing to sell. So even though our demanders are only buying 30 units of the good, our suppliers can still sell 75. And so with that, we get exports of 45 units, the gap between 30 and 75. All right, so let's get to consumer and producer surplus stuff. Consumer surplus, below demand and above supply. It's a little triangle because we're exporting. Our consumers are now facing higher prices and lower quantities. Their surplus falls. Specifically, half times base times height. So half of 30 times 30 is 450. Producer surplus is all that, everything below price above the supply curve. Half of base times height gives us 5,625. Total surplus then, add those together, you get 6,075. So I don't know if this was helpful or not. I know it was brief. I know I didn't help you with much of the math, but it should fall pretty easily from the import video. So hopefully it works. If not, too bad. Good luck, you guys. Thanks for watching. Happy econing.